Welcome back, everyone, to Multifamily Deals and Dollars. I am Jim Lawrence, and of course, I am joined with Kiran Kaur from BC. I'm from Ontario, and we are excited to be back for another episode. Hello, Kiran. Great to see you.
Great to see you, Jim. It's really exciting to talk about real estate and see you again. And you're an amazing investor and a friend. So, yes, yeah, hello to everyone who is watching. And this is a perfect time for real estate. And I'm really excited for all the strategies we have in our toolbox to implement. So, yes.
Yes, and let's talk about some of those strategies that are out there and that are becoming more popular. And here we are in a high rate environment, and rent to own seems to be a topic that's brought up quite often here. Kieran, what would you like to tell our viewers about rent to own, otherwise known as RTO?
Yes, and then for apartment buildings, like agreement for sale or rent to own, it's a great tool. And so rent to own is a strategy when the buyer is having uh, is not ready to take the financing for the property right now, but they like the property and they want to buy, and seller understands that they want to sell, and at this point they want to sell at a certain amount, but they can wait a little bit. They are not in a hurry to sell, but they want to sell at a certain price. So you have a set price by the seller, or looking at what price they want to sell, and then the title does not get changed right now. Title gets changed at a predetermined like time, like for example 2 years or 3 years. And in the meantime, the buyer works on the financing. If it's a single family house, and I'm just like one of my friends, so she was having trouble finance with the credit score and with the credit financing, and had to fix the credit score for financing, for better financing. And like it could be the some people are in a business and they don't report enough income, and they're not ready for the bank to qualify for them that property at a certain point, right? So they made an agreement that they will buy the property at for example, it's $1 million, and they will put down $50,000 as a deposit, and there is a monthly payment, that includes the mortgage payments, property tax, and insurance, so which are paid, and during that time, for 2 years. And after the 2 year term is done, and if the buyer is still not ready, buyer and seller can write in another agreement, and that term can be extended. And if the buyer is still not ready, and they're not paying the mortgage payments or monthly payments, or they're not taking care of the property, and there's a clause in the agreement that can be added, that that damaged that the initial deposit is non-refundable, and there's a extension for increasing the term. And so that's a mutual benefit, right? Like the buyer gets the credit history for the bank to be ready, and they're able to change the title in the time. Yeah. So
Yeah,
it's like buying yourself a time to buy the property. Yeah.
yeah, and a rent to own strategy. A lot of people there's common belief about it being very expensive. I've heard new realtors or inexperienced realtors say that, and just people, it's just something that gets handed down over generation. It it is a little bit more expensive, but I mean, you're getting into real estate sooner, and the value of real estate is going to get you closer to a type of financial freedom. It's going to help you, it's going to benefit you in the long run. So if you're, I mean, a lot of things are expensive to move faster and to get faster into something. So that's the thing. Now, also with RTO, Kieran, it's, we know this, but it's a relationship. It's a relationship
Mhm.
between the buyer and the seller. You need to make sure that there's open transparency, open communication, and it's a right fit for each other. But I've
Right.
heard tremendous things about RTO, and when done properly, they can work perfectly for a lot of people.
I agree. I totally agree. And that the monthly payment for for example, if somebody's paying $3,000 rent and every month, and that goes 5 years, 6 years, 10 years, not ready for the down payment, not enough savings. That's hard. And if doing rent to own, you have the monthly payments you're paying anyways, right? Like 3,000, let's say it's like 3,500 now, including with the property tax and insurance. And that 3,500 is going toward your deposit, down payment, or the mortgage. That becomes part of your mortgage payment. And this is a strategy that is a win-win situation, really great for buyer, great for seller, right? They have now they're getting the property tax and insurance also taken care of, and the buyer is treating the property as if they are going to that as if it's their property, right? It's just the title has not been changed. And when done correctly, done through the lawyer, and I feel it's a win-win for buyer and the seller. Yes.
There's stories out there I've heard, Karen, where the renters or the soon-to-be owners, the people that are doing the RTO there, they are, changing the windows, updating the furnace because they know that this is going to eventually be their home. So they're making the moves to make everything fall into place. So when that agreement hits, when that 2, 3, 4 year mark hits, they are in their beautiful home. And just as Kiran said, if you're paying rent already and you're saving some money in a basement apartment or an apartment building, and you're putting aside some money, you could already be in your own home, this RTO home, and putting aside that money with the contract that you're part of, because that money that's going aside is going towards the down payment, and what you're doing is you're actually working with usually a mortgage broker or somebody in the industry to help you prepare for taking on that mortgage at the end of that contract. So they're walking you through it. They're trying to get you there. People want to see you succeed. So, if people say that it's too expensive or it's risky, my suggestion is reach out to some experts in the field and and educate yourself about it. Reach out to Kiran and myself if you're unsure, and we can direct you in the right direction as well.
I agree. I agree. And I have my investors who are also my friends. They have mentioned like so many apartment buildings they have bought through agreement for sale. So what they did, like just like now, current high interest rate, bank is not giving 90%, 80% loan to value because of the debt service coverage ratio, right? And the property is not optimized. But now, if you do agreement for sale today with the seller, that seller has still great mortgage interest rate, and in the meantime the buyer optimizes the building, updating, renovating the building and increasing units, whatever needs to do to increase the value of that property, increase the appraisal of the property in 2 years. Some cases they don't even have to put down any down payment because now a property was appraised higher. They were able to take more loan to value, and now the title was changed now because you know all those months you pay the payments, and now the property is higher, and there's not a higher you didn't have to come up with the big down payment up front, and have come up with the lower loan to value for that mortgage product. So it's a great strategy. I love it. And if I come across a seller who wants to do rent to own and agreement for sale, I am gonna take it. So yes.
I love it. And you know what, it really, when everything is connected, when the people work together well, it really is a win-win situation. So it's great for an investor. You're getting high premiums, you're getting premium payments, and you're selling to motivated buyers usually. So it's, the people really want to close on the transaction, close on the deal. So the exit strategy is there. I'm not sure, and I actually haven't heard too many stories, Kiran. There must be, with the higher rates that we're experiencing, that some RTOs, I guess, are being extended their contracts.
Yes. So, and like when you can extend, and the only thing is, like in real estate, the only two things, right? Like we are here to make profit. We are here to make sure that we are able to pay the mortgage payment and have optimizing the property value, and come up with a property where you can increase the value of the property,
Right.
right? And if it's emotional decision, you can't really do anything to increase the value. And the market can change. The market can be in future, could be interest rate like a, double digit. So are you able to do the transaction, right? Be ready for that. And having a strategy helps. And it's all about making your numbers work. So come up with a property where this is the perfect property. For example, I was looking at property for agreement for sale, and once during a due diligence, I found out it's not a great neighborhood, and seller was willing to do, um, you know, everything, but end of the day, we walked out of that property because the neighborhood was not great, you know. And your core values, your what your what your strategy is, because for us, me and myself in there, we look for properties which are in great neighborhood and where we can do something to the property to bring that value. It's not, if it's not double, at least a time and a half, so that we can anything going through the, if vacancy rate higher or something to the market happens, or high interest rates, or like big expenditure, we are able to mitigate that risk. So having a property, and it's not a race, and it's not like, we are not behind that we need to close these many doors in this particular time. All we are chasing is that property that fits under our criteria. If it's not under criteria, we're not going to touch it, because it's so easy to buy a property, and it's hard. The operation is hard. So make sure that whatever you're buying, that comes under your criteria, that meets your criteria for buying.
Great point, Kiran. I mean, you know, location is key. And I know a lot of us, especially in some of the major markets in Canada and the US, we're looking at the secondary markets. So secondary markets, you really have to start to understand and make sure you know about the neighborhoods, what's up and coming, what to stay away from. Unfortunately, some neighborhoods don't perform as well in real estate. And really, it's the safety and security of the people that are going to be living there. So the tenants, the future buyers, and it's your property as well. It's an asset. It could be your asset, the investor's asset, or the soon to be new owner from the RTO. So, we want to make sure that everybody is taken care of and that things are going to go as smoothly as possible. We're trying to mitigate as much risk as possible.
I agree. And talk to the lawyers, to talk to the mortgage brokers, and when you're doing the transaction, make sure that it's done legally. It cannot be just a paper or verbal. Make sure that it's on the legal papers, and that the initial deposit goes through the lawyer. And if both the seller and the buyer agree that it needs to be in the mutual trust account, it can be. But giving money directly to the seller, and when the title has not been changed, and it gets it gets hard, because what if the seller goes behind the buyer, the tenant buyer, and sell the property, right? There's like now buyer doesn't have any control. So make sure that you're talking to the experienced lawyer and thinking about the worst case scenarios. And so we were doing we were looking at one agreement for sale, and so the buyer, like our lawyer, said, I'm not gonna do it because I don't think that you guys are safe, because the seller was asking to send a deposit, like very small deposit, right? Like so directly to his account rather than in the lawyer's trust account. Because now the title has not changed, and we don't have any right, like not to, seller, it's their property, they can sell, they have the mortgage. So make sure that you have really a great lawyer who is taking, who is taking, who you are in best interest of their terms. And it's all, end of the day, it's all about numbers and experience. Yeah.
No, beautiful. And I mean, any real estate transaction, even if it's with your best friend, your close family member, do it legal. You need it. It's just be safe for both of you. It's just, you're going to be thankful in the end. It costs money, yes, but it's just insurance. If anything goes wrong, and who knows, there's a lot of unknowns that can happen. And if something happens in somebody's life that's a life-altering event, you need to have something legal in place. Okay, so it's just to be safe for all parties. Please seriously consider that.
I agree. And like if any of and anyone in the audience is looking to buy a single family house, we are selling all our single family properties. We are investing into multifamily, and I'm more than happy to do rent to own if somebody's having a hard time with financing with high interest rates and they don't have enough down payment. So reach out to me, and we can find a solution. So yes.
Excellent, excellent. I'm sure there's some awesome opportunities there. So I want to read this out just to make sure everybody's clear here, okay? So the rent to own is a contractual arrangement where a renter agrees to rent a property for a set period with the option to buy that property before or at the end of the rental period, okay? This option typically requires the renter to pay a non-refundable option fee upfront. Okay, Kiran mentioned that, which gives them the exclusive right to purchase the property later. And in addition to regular rent, the tenant might also pay a rent premium, which Kiran mentioned, part of which may be credited towards the purchase price. So there's a great reason for you to engage with a lawyer in that, your own independent legal advice, just to make sure that you are protected in that type of transaction.
Perfect. Yeah, well explained. So look for the properties, and it's a great property, and financing not working out, reach out to the seller if they're open to agreement for sale. And that's that could be the great opportunity.
Now, we talked about agreement for sale. There's a little bit of a difference between, so I've got a definition here that I want to read out as well. So an agreement for sale, AFS, it's a legal agreement where the seller agrees to transfer the property ownership rights to the buyer upon fulfillment of certain conditions set in the agreement. Most commonly, the full payment of the purchase price over time. And unlike traditional sales, where the title transfers immediately upon the closing of the sale, with an AFS, the title remains with the seller until the agreed upon payments are completed. I think we see AFS more often in multi-unit buildings and things like that. And the RTO is more in a single family home. And as Kiran mentioned, that she has some properties that she's looking to offload as well. So
that's great. And the other thing is, when you look at the purchase price, you can buy this property for, like for 500K today. But if you're looking to buy in a couple of years, over time, there's appreciation. So different markets have different appreciation. So for some market, they have appreciate 3% per year. Some markets, they only appreciate 1% per year. So the seller adds that 500K today for the purchase price, and then add 3% second year, third year, and then you can the price you're agreeing to buy in 2 years is not the today's market value. It is higher. But like, I want to remind the audience, you are getting into the property purchase. You're finding the property, you're buying it, and its only difference is you are buying yourself a time. Even though it's a higher purchase price, in coming years, it is you have that right to do. You will have experience how does it feel to buy a property, what are the obligations, taking care of repair and maintenance, and like your rent is going toward the mortgage. I think that's beautiful. Yeah.
Awesome. Beautiful. I love the way you explain that there, Kiran. So I just want to explain some key differences because I know the RTO and the AFS sounds very, very, very similar. So in the RTO, the title remains with the seller until the option to purchase is exercised and completed, usually through traditional financing. In AFS, the title also remains with the seller, but the buyer can actually gradually gain more equity in the property through contractual payments. So there's the opportunity there to get equity in the property. Now, in terms of financial commitment, an RTO usually involves regular rent payments. All right, there's a key there. That's rent to own, plus an additional premium that may contribute towards the down payment, may and usually does contribute towards the down payment. Now, in AFS, it involves installment payments directly contributing towards the purchase price, acting more like a form of seller financing. So that's a key thing to remember there. And the end result is, of course, a rent to own provides an option to buy, not an obligation. The AFS is an agreement to purchase the property outright over time, assuming all payments are made as agreed. So making sure you meet the terms and conditions. So just to give you, there's more to it. Just wanted to make sure you guys see some of the top differences in between RTO and AFS.
And the lawyer can also, in the clause, there will be all the, worst case scenarios. So what happens if the seller dies, right? Like, and it needs to be all the paper ready, and that, present to the family that, we had this agreement that we are going to buy the property, and they have to follow, all the things, because it's not like a wife, sells a property and now that agreement for sale and the deposit and everything is, gone. So do the things legal and do through the lawyer, and it can save you a ton of money.
And this, again, is why it's always important to have legal representation representing you. So don't take legal representation that's offered by the seller's professionals or the seller. Find your own, and find legal representation and any professional representation that is a real estate investor focused professional. Accountants, lawyers, brokers, everything. That's who you need on your team, is somebody that understands the transaction. Okay, so that's great.
Yes, and if anybody wants to reach out to a mortgage broker, because not every mortgage broker has experience with rent to own. If somebody's looking to have a mortgage broker referral, so please reach out to me, or I can share the contact with you, Jim, too. So please reach out to us, and we can mention the name. And he has done tons of rent to own, and he's a great, yeah.
Well, I think we need to point out too, I'm in Ontario, so I can refer anybody to an Ontario rent to own specialist, and yours is in BC, I'm guessing, Kiran, or Alberta?
So the mortgage broker can do anywhere in Canada.
Beautiful, wonderful. And the other thing I wanted to point out, Irismar and I have a great opportunity. If anybody's looking to invest in the Ontario market, reach out to us. We are looking for a financial qualifying partner, and it's a great way to get started on an investment that is already established. So it's a great opportunity for you. So reach out anytime to myself, Irismar, and
All about, real estate is all about partnerships, right? Like all about, I feel like it's a puzzle, right? Like when I'm sitting on the floor and doing the puzzles, I'm thinking real estate is a puzzle. You need to come up with a down payment, you need to find a property, and you need to come up with a qualification. And so can't qualify, find a qualifier. Can't find a down payment, find somebody who has a down payment, or seller, right? So anybody, or the bank, or the line of credit, or HELOCs, or savings, registered funds. And then can't find a property, talk to the investors who have a big pipeline of properties coming to them, deals coming to you, coming to them. And other thing is wholesalers, right? I love my wholesalers, and I think they are really experienced, and realtors, also who are also investors, they think about the properties like differently, and it's all about a puzzle. So you want to invest in real estate, you want to buy a property, just complete the puzzle.
Absolutely. And and when you do it with friends, the puzzle's a lot more fun. So find it, the JV, and get to it, and reach out to Kieran and I anytime. Is there anything else you wanted to add, Karen?
I I think rent to own, agreement for sale, and vendor take back are great strategies, and it's all, not everybody is aware. And I am more than happy if somebody's to looking to connect the investors who have already done it, and learn from their experience, and referring the lawyers and mortgage brokers. Anything you guys need, we are more than happy to help you guys.
Reach out anytime, guys. You can find us anywhere on social media. Facebook's the easiest one, of course. And we'll see you guys next week for another episode of Multifamily Deals and Dollars. Thank you, Kieran.
Thank you so much. Have a happy, great week. It's Tuesday, and we do the podcast every Tuesday. I'm really excited to share my journey with you, Jim, and with our audience. And I feel like anybody can invest in real estate, and having, my mission is to transform lives through time, and, financial freedom. And I think real estate is a great strategy. And yes.
Love it. Love it. Have a wonderful week, everyone. We'll see you next Tuesday.
Okay, thank you.